All right. Hey, everyone. Welcome to the Bullish on Bitcoin podcast series. We're here live from ETHDenver, actually Bitcoin Denver, because we have so many Bitcoin events. And with me, I have Dan Held, arguably one of the most prolific Bitcoin OGs in the space. And we're here to jam about, the state of Bitcoin DeFi, BitVM, and obviously also Bob.
And why Ethereum was simply a testnet for Bitcoin, right?
That too, of course. Where else to talk about this than at literally the ETHDenver.
We literally are in ETHDenver right now.
At the main event. So here we go. Dan, we're kind of reporting right in the middle of the, somewhat of a market downturn. We've seen Bitcoin kind of detached from the rest of the markets. People obviously getting nervous. We're here at the ETH conference. Everybody's very desperate about the state of Ethereum. What do you think this means for Bitcoin and the broader ecosystem over the next couple of months, weeks?
Yeah, great question. This is my fourth cycle, so I think a lot of people, if this is their first cycle or second, they're lamenting, they're worrying about price action. Bitcoin couldn't have a better, more bullish setup than now. There's no FUD. Previous cycles, we had China banning Bitcoin FUD. We had Mt. Gox collapsing, or the Mt. Gox distribution is looming overhead. We had U.S. regulatory FUD. There's no FUD left. There may be quantum FUD, but that's not really a short-term issue, and it can be resolved semi-easily-ish. So, I just don't really see any negative headwinds here. Sure, there might be some macro stuff, but honestly, Trump is a huge, capitalist, so he's going to try to pump the markets as much as possible. I think we see the Ukrainian-Russian conflict resolve. I think we see the tariffs get resolved shortly. Those are very bullish things. Tariff rates are simply positioning. He's not going to settle at 25% tariffs. By the way, the U.S. already has tariffs. He's just merely renegotiating what the tariff rates are. So I think there's a lot of anxiety in the market right now over what the impact of the tariffs might be. Will Doge be effective? I think it will. I do really want to bet against Elon Musk. The guy's a fucking machine. So, I see these as very bullish. These are catalyst moments where we could go from a kind of timid, people are uncertain in macro and in crypto, to risk on all over, within a matter of weeks or months. So I'm still very bullish. I don't think 100K was the high for Bitcoin. I think we have tons of connectivity to the traditional financial system now through Bitcoin ETFs that we didn't have before. That's massively bullish. And there's really no negativity around Bitcoin right now, other than the price is lower than we want it to be.
If we look at the state of regulations, right, we've seen one case after the other just being dropped by the SEC. That for me is ultra bullish.
Super bullish.
And it just kind of, it signals the US is open for business again. And I think that obviously is going to be a big catalyst. The US has been, for the longest time, one of those hubs where crypto innovation has essentially spawned from, but you couldn't do much, right, in the country. And I think now we see everybody kind of trying to come back. Europe will have to catch up, obviously, but I think it's just a matter of time until we see a global shift towards friendliness with crypto projects and so on.
It's incredibly important that the U.S. embrace crypto because we are the largest market in the world. U.S. sets the tone. A lot of other countries just follow what we do. So when from a regulatory perspective, we're very negative with crypto, it set a bad tone across the world. So the U.S. changing their tone, that's hugely bullish. Now, I know different regions have different policies, but speaking in generalizations, the U.S. a lot of other governments look to the U.S. as guidance. So yeah, you've got that, plus we will see increasing number of financial advisors recommend Bitcoin in their portfolio. You've got Fidelity and BlackRock hard shilling Bitcoin. These are trusted giant institutions, and gray hairs too that are in their 60s and 70s being yeah, Bitcoin makes sense. I feel like I'm taking crazy pills sometimes where people are they're bearish on Bitcoin. I'm dude, I was the weird lone rebel for a while, right? And now we have some of the most trusted financial and largest financial institutions hard shilling Bitcoin. Not even oh yeah, we find Bitcoin interesting. They're on CNBC. Larry Fink's on CNBC. Hard shilling Bitcoin is gold 2.0. I feel like I'm in a dream sometimes. So I couldn't be happier about where Bitcoin is at in its life cycle. Not life cycle, but in its trajectory. And so yeah, short-term price action really doesn't affect me too much. Do I want it to be higher? Sure. But
Who doesn't,
yeah,
right?
who doesn't? Yeah, I still think we're in a bull run. So a lot of people are like, oh yeah, maybe this is a bear. If that happens, I would be extremely surprised.
I mean, you mentioned, right, the ETF, and, I'll use that to kind of bring this in towards, the space of Bitcoin alternatives and DeFi. I mean, look, I personally think ETFs are great, right? You get Bitcoin into the hands of people that previously were anti-crypto. I mean, we had so much FUD about, Bitcoin's energy spendings and the issues around that. I don't hear anything about that anymore.
Yeah.
Why? Well, because the banks are now trying to sell Bitcoin to my grandma, which is
Totally.
great. It's great. But there's always a but, naturally. What I'm a bit concerned about is with Bitcoin being adopted more and more by institutions, you have a lot of people essentially, having Bitcoin bought on their behalf. My concern is that we might end up just taking Bitcoin and plugging it back into the old financial system. And, that might be a short-term success. But long-term, if in 5 to 10 years, I have to go to my bank and ask them, hey, could I use my Bitcoin?
Right.
That's not Bitcoin for me, man. Like, that just doesn't feel right. And in my opinion, that's why we need to keep also working and really be laser focused on Bitcoin DeFi and making sure that Bitcoin finally catches up to the DeFi ecosystem and is able to be used, right, in a decentralized way.
I 100% agree. I mean, if people aren't self-custodying their crypto or their Bitcoin, then we've sort of lost the plot a little bit. Now, I kind of view it like gold, though, right? Like, there's a lot of people who own gold through the gold ETF. They've got gold, and it's stored at the bank vault at the bank, right? So you're kind of like, well, is that really, like, does that... So one, I don't think that hurts gold. Gold just exists. Bitcoin just exists. Its monetary policies haven't changed. Gold is hard to mine. Governments can't inflate the supply. Same thing with Bitcoin. And so those don't change no matter how many people custody or not self-custody. However, for its optimal value for people, they need to self-custody it. Otherwise, someone can just seize all your Bitcoin, and then that ruins one of the key elements. Bitcoin is a hard-to-seize asset because if you self-custody, it's really hard to get it from you. Its monetary policy is the best monetary policy on the planet, and it's impossible to censor. So, those are the three value props of why you'd want to use it or hold it or do anything with it. And so if you don't self-custody, you lose a big value prop. Like, you still have exposure to its monetary policy, but you don't have exposure to its censorship resistance or to the self-custody nature of, like, truly owning the asset. So I think there's always going to be a spectrum of people who want to own the asset and some who are like, I just want to put my trust in other people. But I don't disagree with you with, if we don't allow Bitcoin, if Bitcoin L2s aren't built the right way, and if they're not built to handle the masses, then the protocol itself limits how many people can actually access Bitcoin. So I do think that's a problem. I don't think the institutions are as much of a problem because people are going to do what people do, is take the easiest path, and that might be through custodial manner.
Institutions, I mean, if we always view them as, the institutions and, they hate DeFi. That's actually not true, right? It's so funny when I go to institutional events and, you'd expect them to really talk about, Bitcoin's price and the ETF, how they can bring like more pension funds and whatnot on board. Then you get into conversations that are like, oh, did you see this debate on Twitter? Man, that was cool. Like, and they're all into DeFi, right? Like, I think we have to understand that, there might be a big brand, a big bank that kind of, is a front-facing thing, but there's people behind the scenes. Why does Bitcoin get adopted? Well, because there's a bunch of people who really want Bitcoin, and they all love DeFi. I mean, you have Fidelity writing reports on BitVM, right? So it's just a matter of time, in my opinion. I do think we need to give them a push in the sense that we need to prove that it works. Yeah. Because right now, we haven't yet. Right. I think Bitcoin is still in a state where people consider it this rock, can't do much. Lightning clearly did not help in disproving that. Sure, you can do payments. It's arguably, and we have to be transparent here, it's currently the only real L2.
Right, if you want to...
If go down the semantic route and, kind of follow this whole debate. But what does it even mean? Like, if it's the only real L2, but it doesn't really solve any of Bitcoin's problems, does it really matter?
Yeah, that's where on stage, when I was on stage earlier a couple days ago, they asked me, Gabe Higgins from Galaxy asked me, what do you define as Bitcoin DeFi? And I was like, I'm pretty permissive with my interpretation of it. It's like anything connected to Bitcoin or utilizing Bitcoin in DeFi capacity. Like bridged Bitcoin could be bridged to a Bitcoin L2 or bridged to Ethereum or bridged anywhere. And so I consider that to be Bitcoin DeFi activity. Now, does it have the right trust assumptions that I would prefer? Like WBTC? Absolutely not. It's totally centralized. But, other like threshold, like TBTC, getting closer to something more decentralized. So yeah, there's always this decentralization purity test of like what is or isn't a proper level of decentralization, like whether that's with your L1, your L2, or a DApp. I think a lot of people will criticize the Bitcoin L2s and be like, oh, these aren't exactly big, these aren't perfectly an L2. But I think the market decides what people want to use. And that's where we saw Polygon, which is the first ETH L2, that was a threshold model. So people use that despite its game theoretic weaknesses, which, again, these are hypothetical game theoretic weaknesses that may or may not ever be exploited. For example, Rootstock and Liquid have been operating for quite some time, and I don't think they've ever had a game theoretic attack.
Oh.
Doesn't mean that it can't happen in the future, and also the more economic activity happening on that L2, it increases the chances of that attack happening. With that being said, though, there's the surface area of decentralization is quite broad, and my definition of Bitcoin DeFi is leveraging Bitcoin in DeFi activities. There's lots of different trust assumptions involved, and I don't split hairs on what is my appropriate level. I just care what the market decides is the appropriate level.
I was never a fan of, attacking WBTC or like basically criticizing people that use Bitcoin and DeFi this way, because look, there were no other tools available. WBTC was a blessing because ultimately what it did, it took Bitcoin and made it accessible in DeFi for the first time and proved that there's demand. Yes, it might not be the ultimate long-term perfectly trusted solution, but I also don't think it's the right approach of, going out and building bridges that are, maybe are technically better, but then are unusable or don't scale. And look, we've done that. Like I was in a couple of years back, we're building trust minimized bridges using economic game theory, and we kind of felt we had to attack WBTC. And then we got to know the team better, and, we kind of learned also that, they wanted to make Bitcoin useful, and that was the best way of doing it. And arguably, and that's just a lesson learned over the last couple of years, that's just what institutions wanted. Like if you want to move a lot of Bitcoin, they preferred to work with BitGo because arguably at that time it was the best solution. And it still is a very robust model. And like TBDC is great. But what I also learned is there is flavors of trust, and trust is generally perceived. And with newer technologies, it takes time for them to actually build this trust. And that's the beauty of a tech like TBDC with like threshold models and also BitVM. The beauty of this is that the longer we keep building it, the longer it's operated, the more trust it will earn. But on day one, a lot of people will prefer to go to a custodian that specializes in custodying it and has a smaller attack surface and start with that. And I think it's fine, right? It's not the end goal. I think we're all in the clear. And I never fully understood why there's still so many people attacking all these centralized assets and saying, oh, they're going to be hacked tomorrow and you should definitely switch now. Switch to what? Realistically speaking, we're still at a stage where the tech is not there yet. We're getting there. We're making a lot of progress. But I honestly think what Bitcoin has been lacking for the last decade is pragmatism. Yes. And that's, in my opinion, the Bitcoin Renaissance is actually about pragmatism, right? You can do things.
Yeah, it's letting perfect be the enemy of good. Right, like you want this level of decentralization and perfection that, frankly, a lot of DeFi just is not going to fit that level.
And I think it's okay as long as we're honest about the risks, and that's where I personally draw the line. Like I think it's okay to not be fully decentralized, but be honest. Right?
Yeah, ethical considerations. Like for me, I 100% agree as a marketer. I think when folks aren't marketing their product properly or the protocol properly, I think that's like pretty egregious. That's where a lot of Bitcoiners are like, oh, that's not decentralized enough. And it's like, well, in what way and how does it break? Like Bitcoin itself has game theoretic circumstances where it can break down.
Yeah.
If a government wanted to, if they bought up enough miners, now there's all sorts of different game theory that plays out here. But if someone wants to burn the money to try to hurt the network, it is possible. It's just very expensive. A lot of these game theoretic attacks are strengthened by the opportunity cost, where proof of stake is having staked collateral that could be provably burnt if you misbehave. Whereas like Bitcoin miners have already bought the equipment and they're earning Bitcoin, but if they came together and tried to disrupt the network, they're burning their cash flows because the value of the Bitcoin coming from the machines would drop in value. Anyways, even Bitcoin, Ethereum, they can all break down to different game theoretic scenarios. So what we're really talking about is like, well, what game theoretic scenario does this DeFi protocol break down in? I like the point you brought up about trust. Almost no one really thinks about it that way, and I really appreciate how you said it, which is that time builds trust. Like, we can come up with the most secure X, Y, or Z tomorrow, but human beings are human beings. We're not robots. So we're not going to all immediately recognize the value of that tech. We're going to develop trust with it over time. We're going to develop trust where we go, I've used this. Other people I respect and know use this. I feel more comfortable with it. And yeah, the time building trust thing, this is also why I don't think the Ethereum people really grok monetary policy at all, because they're like, look, man, yeah, we changed the monetary policy a lot, but like it's got lower inflation, bro. And I'm like, well, it's not about a rate of inflation or deflation, because the dollar's deflationary. It doesn't make the dollar's deflationary at times, which doesn't make it sound money. It's about the time and trust that's built into this monetary policy. Do we trust that in the future you won't change it? And the only way that we can develop that trust is through time, because monetary policy stuff isn't even, I mean, it is code, but it's very basic.
I mean, this brings us actually to a very interesting kind of topic here about, Bitcoin L2s and, Bitcoin ossification, and this whole multi-year debate after the block size wars. And I kind of feel, and maybe I'm exaggerating, but Bitcoin was in this, it felt like a bit of the dark ages. Everybody was a bit concerned. Everybody was tired, and kind of people shunned to engage in the discussions again for many, many years. And I think, look, realistically, Bitcoin will not be changing a lot. That is pretty clear. And the more you talk to people, the more you realize that's what people like about it. It's predictable. I know what Bitcoin is today. I know what it's going to be tomorrow. I know that the monetary policy is not going to change.
Yep.
Long term, we definitely have to think about this. How do we make sure that Bitcoin is sustainable? How do we make sure that the network fees are enough to sustain mining operations, so we actually keep the network secure? And we keep kicking the can down the road. Ultimately, it's going to catch up. I think the next halving is going to be interesting. My personal take is, by the next halving, we got to show that economic activity can happen on Bitcoin, and that L2s contribute to that. First, we got to make L2s work, though, right?
Yep.
And that kind of, for me, is an interesting kind of dynamic, because Bitcoin will not change, at least not very often. We have the whole debate of, which covenant do we add, and I personally think we're going to get something in. Like Lightning had 3 forks.
Yeah.
Why shouldn't L2s get a Bitcoin upgrade that makes these things easy? But on the other hand, I think it's also a different time. We've had a lot of these upgrades. Taproot introduced a lot of unexpected dynamics, which, turned out to be for the better, but it could have also turned out to be for the worse.
Sure.
And I kind of understand why there's more, people are more conservative now. So with things like BitVM, look, honestly, it's a hack. Let's be honest. It is a hack, but it works. And it allows us to prove out that, hey, we can build solutions, layer 2s, that have trust minimized access to Bitcoin, and people actually care and want that. And if we can't prove that, well, okay, maybe we need to think about something else. Maybe, we have to take a different approach, and maybe it isn't this specific opcode that needs to be added. But
that's, with the ossifiers, they I think lack, they're not adhering to social consensus over what was agreed upon during the block size debate. The block size debate was like, cool, we're not going to make Bitcoin's base chain any bigger, so we have to push all the activity to L2s. That was what we all agreed on. That was the consensus. And then, however, we never, other than Lightning, we never really added the ability to strengthen the connectivity between Bitcoin L1 and these L2s. And that's where CTV, Opcat, et cetera, BitVM, without, with extremely minor changes to Bitcoin, we actually adhere to the social consensus that we all agreed on, which was that, cool, yeah, we're pushing activity to Bitcoin L2s. Let's make that connectivity much stronger. So for the ossifiers, I don't understand that sentiment, because you will have violated the original scaling social contract that we all basically had agreed upon if we don't do these changes. Because then it's like, cool, yeah, not only do I disagree with scaling Bitcoin in the base layer, but I also disagree with making it really secure for people who will only be able to access it versus on an L2. Because as transaction fees rise in Bitcoin L1, as game theoretically, as we play this out, only high value transactions can occur on the base layer, and most of the economic activity will happen on L2s.
I find it quite interesting that, there was this kind of social consensus, I guess, and Lightning was definitely pushed and got a lot of attention, and a lot of resources were invested. And it feels like it's a weird dynamic where, I think it's, the sunken cost fallacy, where people reject to accept that Lightning just does not serve all the use cases that people want. I mean, there's clear proof. People don't want to buy their coffee with Bitcoin. I mean, that's not the main use case.
100%.
And then you see that people want to use Bitcoin in DeFi. The activity there dwarfs everything that Lightning has ever seen.
Totally.
But then you still have a lot of the people that were actually, you know, big voices back in the day during these block size wars go out and still like shit on Ethereum. And, you know, we had this Bybit hack, and then you see a lot of people, I mean, kind of troll, but do it in a way that it's not quite clear whether they mean it or not, that, oh, Ethereum is going to fork. And I just don't quite get it, right? You have solutions for sidechains at Bitcoin, like Liquid and others, that just didn't really take off, right? I mean, and my personal take is that you can build whatever you like, but the tech is not the only thing that makes this work. You need to go where the users are. And realistically speaking, everybody who wanted to use DeFi has left to Ethereum and other networks. And I think like hyper-Bitcoinization is not going to happen from like one day to another, right? It's going to take a lot of time. You need to onboard users. You need to meet the users where they are and not tell them, oh, you have to use Lightning. You have to pay for your coffee with Bitcoin.
Right.
If you're not selling everything you have and buying Bitcoin to hold, you're a bad person and I don't want to talk to you and everything else is a shitcoin. That's just such a negative approach.
Yeah.
It just, people don't want that. Like
it also hasn't worked.
Yeah. No, I mean, clearly, I mean, look, I don't want to go to Bitcoin and then, you know, have everybody like telling me in a condescending voice, oh, you know, if you use Bitcoin for these things, it's bad and you should only use it for these very serious use cases.
Which I find hilarious, because if you look at the early block space usage of the Bitcoin blockchain, it was gambling and drugs. Like that was it. Like that literally was it. I mean, no one was buying coffees and shit. No one ever was buying coffees. I mean, a bunch of hobbyists might do it just to virtue signal, but no one, it wasn't legitimate economic activity. There wasn't any, that's not solving a problem for anyone. It does solve a problem for buying drugs and gambling, though, because those transactions do get censored. So the Bitcoin blockchain, that was the earliest uses of the Bitcoin blockchain. So these people that are like, oh, icky altcoins, I don't like that. Well, welcome to what Bitcoin has always been. It's never been like this purity chain of people buying coffee beans and coffees and sandwiches with Bitcoin. It was never that.
I feel it's some weird form of complacency where people have been around Bitcoin for so long, either they have made it already or it's become kind of part of their identity. And it turns in Bitcoin into this religious thing.
Yeah.
Where it's not meant to be that.
Well,
why is my use case better than...
This only happened post-2020. That was Saifedean, the Bitcoin standard, moralized money that like fiat money had degraded the quality of art, homes. And so then they started to moralize all transaction types. And that's where we really broke away from like what maxis used to be. We're like, hey man, shitcoins are stupid. Like if you want to trade them, cool, but I'm not going to go tell you to buy Litecoin. Like that's dumb. You know, that was like the old maxis from like the 13 through like 2020 era. Because like the ICO boom was a gut reaction of like, this is a lot of trash. I mean, the ICO boom was horrible. It was really bad. There was the altcoin boom of 2015. I mean, I mined Primecoin, which was dumb. You know, there's Feathercoin, Primecoin, Doge came about in the 2015 era. You also had like Counterparty. But the maxis back then were like, yeah, man, cool, that stuff's dumb, but like you're not scammers, like you're just kind of dumb. And then whatever we find useful from that, we'll bring back to Bitcoin. And so that's what we're doing here with Bitcoin DeFi, is that we saw what activity happened on Ethereum that was legitimate, and we're bringing that back to Bitcoin because we're like, there's clear demand to borrow dollars using your Bitcoin as collateral, or to have governance tokens that, you know, that's like a quasi form of equity, or NFTs, that's a legitimate new asset type. Like, that's not a scam, and that's not competing with money. It's a very unique asset type. So those were, to me, clearly indicated economic activity on Ethereum that wasn't just trying to compete to be another money. So, you know, to see that and not want to bring that back to Bitcoin, it feels a little bizarre, because that's what the old maxis used to feel. It's only recently, 2020 plus, that kind of Bitcoin was this purity thing of like Bitcoin brings about moralistic stuff. That's where the whole meat and family and Bitcoin thing came about. Dude, Bitcoin is about 3D printed guns, drugs, and Bitcoin. Bitcoin is like ultra punk rebellious, like purple hair, I don't care, trans, not trans, whatever the fuck, doesn't matter, right? Like,
it was exactly, I mean, what I kind of find fascinating is that culture moved on to Ethereum, because that's where the innovation happens. That's where the fun is. And I personally think, you know, it should be fun. It shouldn't be always about being serious and, you know, telling people what you should and shouldn't do. I mean, the whole point of Bitcoin is you can do whatever the F you want.
Yeah.
And that's the value prop.
Well,
And you may not like what I'm doing with Bitcoin.
Right.
It's none of your business.
Right.
Like I have my, it's like that's what the system was set out to do. And yes, sure, like if I'm trying to attack it, but what is even an attack? If Bitcoin can handle a few people inscribing NFTs, how is it ever going to get any adoption? I mean, for me, that's just proof. Look, Bitcoin needs to evolve. Like if you don't change, you're going to fall behind. And yes, Bitcoin as the asset, sure, that's not going away anywhere, without doubt. But I think, it's still just such a controversy to me that if you want to do anything else with Bitcoin, then, send it around, you have to go to centralized exchange. That's not how it should be.
Totally.
And that's why we need, I think, there is this consensus, like we need layer 2s. Like that is how we scale Bitcoin. But like, why haven't they really worked so far? And in my opinion, it's like three things. The number one thing is, okay, we really did not have the tech, right? We didn't have a secure way to bridge Bitcoin into these layer 2s, right? Not in a scalable way. So that, of course, in my opinion, didn't prevent people from doing it, but it definitely was a barrier for many. And two, we also didn't have a way to inherit security from Bitcoin at scale and do this in a way that is really reliable and scalable. Plus, the whole roll-up stack wasn't as developed. Well, now it is. Like we have the ZK tech, the roll-up stacks. They're all there. Ethereum developed that. They're robust. They're in production. Billions of dollars are getting deployed into this. And now with BitVM, we finally have the blueprint of, hey, here is how we actually solve this thing that we previously considered to be the holy grail. But it's not. Like it's actually achievable. But there's actually two other things. You need to build an ecosystem. You need to make sure that builders, for the first time in ever, could choose Bitcoin as their target. Because right now, let's be honest, any new startup will go to Ethereum, maybe Base, and then now Solana is coming along. Nobody chooses Bitcoin still.
Right.
Now, now with more capital flowing in,
it's
people
changing.
are, they're able to take the risk, but it's still a heavy lift. If I have to, go and build on Bitcoin L1, or we reinvent another virtual machine that is, better for Bitcoin because for whatever reason we want to do that. I think what we need to do, and the job of like Bitcoin L2s, is to level the playing field. Make sure that as a builder, I can choose to build on Bitcoin without being at a massive disadvantage to all my competitors that are building on Solana, ETH, and other networks. And that's what Bitcoin L2s, in my opinion, are already achieving, right? You can go build on Bob, and there is no difference between deploying on Optimism, Base, or Bob. And, the EVM might not be the best virtual machine, but hey, it works, it has adoption. And arguably, it's also the most secure because, man, like there's so much money that is deployed onto that. There's so much research. It's more secure than any alt VM, just by adoption. And the last point is liquidity, right? I have to be able to do something with my Bitcoin. If I bridge it over to a network, I deposit it into something, and there's nothing there, what am I going to do?
What are you going to do, yeah.
You need access to stable coins, and you need on and off ramps, you need people to be able to bring other assets in. And I feel that if you look at the history of like sidechains, none of them actually have achieved that.
Yeah, none of them really. Rootstock and Liquid really didn't do anything to they just built it and that's it. They didn't really foster an ecosystem.
In their defense, like they were also early, right? It's like timing is definitely a thing,
100%.
I think Rootstock could have been bigger than Polygon, and there was multiple like dynamics that prevented it from becoming so. And that's why Bob exists, and that's why there's now 75 plus other Bitcoin L2s that are trying to solve this problem again. And like Rootstock's still around. They're also now coming back, trying to compete. And I think it's great because there's a lot of lessons to be learned. They've been around for a long time. There's things we can learn from them, but there's also a lot of things that they can learn from these newer teams that have experience in other ecosystems and understand that, look, network effects matter. People don't want to, have these ethical debates of like Bitcoin or shitcoin. No, they just want to build cool products.
Totally. And I think this is the right time for Bitcoin L2s because I was asked this by my LPs in the Asymmetric Bitcoin DeFi Venture Fund, which we're an investor in Bob. They were like, well, why now? Why, Rootstock and Liquid didn't really ever take off. Why now? And I think part of it was like, I think go-to-market is really critical because if you look at Polygon, that's a sidechain. They started as a sidechain. So if that was successful, then why weren't Liquid and Rootstock successful? To me, that meant that there wasn't a tech problem. There is a tech problem, but like it's the MVP can be a sidechain, and for some reason on Ethereum that became popular because of marketing, BD, getting the healthy ecosystem. Network effects are really hard to get, and I think Liquid and Rootstock were just like, oh, we built a platform, come build on it. Versus like, no, you got to foster. It's like a healthy ecosystem of like the right plants and animals, and you got to have like the right dApps, and you got to bring in TVL. You got to bring in liquidity providers. You got to have the right, you got to. It's network effects are tough. Like if you ever used a social media app where no one else is on it, it's the same thing.
Yeah.
Money's a network effect. So I think that's where they failed. It was marketing their L2. They never really got that network effect going. Whereas like Polygon did succeed, and that's where I think now we've got other technology improvements. Plus, I think more motivated and better funded founders.
Yeah. But I mean, Polygon did something different, right? Because you had, these religious wars going on, right, back then. And I feel like one of the reasons perhaps that sidechains hadn't worked on Bitcoin before is they were going for the wrong users. They were trying to convince users to change their behavior. Whereas you already had a lot of people that went to Ethereum, then they wanted to use DeFi. And I feel like talking to these people who already discovered DeFi for them, but they couldn't use Bitcoin in DeFi because there was no easy way of doing that. It was painful and so on. That's your initial target audience. And Polygon understood that, right? They aligned with Ethereum. They onboarded a lot of big Ethereum names into their ecosystem, started working with them.
Because Liquid is trying to convince Bitcoin maxis to use it. And that's actually a very small percentage of Bitcoin owners. Only 13% of Bitcoin owners only hold Bitcoin.
Yeah.
So yeah, they were preaching to the wrong audience. Totally agree.
And I mean, like, we as Bob, right, we take quite the aggressive approach on that. You could call it controversial even. We're like, okay, we're not just a Bitcoin L2. We're going to embrace the fact that, all the DeFi activity happens on Ethereum. All the startups that want to build, or the vast majority, goes to Ethereum. Well, let's go where the users are. Let's go where the startups are and talk to them. And like, hey, do you guys want to work with us to build on Bitcoin and access the 300 million plus users that don't yet have access to DeFi? Make it easier for them. And that's why we're building a hybrid that not only connects to Bitcoin, but also to Ethereum and in the future, maybe other networks. And I do feel that it gives us an unfair advantage. I mean, of course, I'm naturally biased. Yeah, otherwise, I wouldn't be building Bob. But the effect we see is that we have a lot of tier 1 DeFi players building with us. And if you look at other chains, other DeFi apps, they all have a Bitcoin strategy. Anyone that does not yet have a Bitcoin strategy right now, it's not going to be around in a year. Every big DeFi chain, DeFi project, they have Bitcoin markets. They're all trying to get Bitcoin liquidity, and they're trying to figure out how to get into Bitcoin. I mean, hell, Cardano now is trying to, do Bitcoin stuff.
It's like, kind of wild to see that, yeah.
And I think, ignoring that will be wrong. And just going down the same road as Lightning and enforcing and just only building the tech, it's the wrong decision. You need to make sure that people can actually build. And the way we see it, and look, we've built in other ecosystems where this wasn't the case. We've been on the other side, on the receiving end, as builders of like projects that depended on like infrastructure and like an ecosystem. And if you take the approach and you say, oh, I'm going to build the tech and the builders will come and it's their problem, and you don't consider builders your clients, that's the wrong approach. I mean, as on Bob, we consider every dApp is a client. It might be a Web2 way of thinking, but we're only successful if they're successful, right? I can build the best infra. If nobody's using it, who cares, right? And I feel that mentality has not yet quite arrived, even in the Bitcoin L2 space. It's coming more and more. You see more and more teams realizing that they have to be friendly with Ethereum and other ecosystems. But I do still, we still I get a lot of comments sometimes at Bitcoin events like, oh, but why are you doing Ethereum stuff? Yeah, but why not? That's all Bitcoin. That's Bitcoin. They're Bitcoin users, right?
Yeah, and this is where when we look at founders like yourself, we look at like very pragmatic founders who want to go build a product that people want or a protocol that people want. And so, if that means that you embrace Bitcoin and Ethereum, that's awesome. Like, Ethereum is the largest DeFi ecosystem out there, so why wouldn't you want to think about a strategy where you attract them, at a minimum, So yeah, that's where we were really excited about Bob when we first talked almost a year ago, I think, right?
Yeah, it's been a year now. It's been a year.
Or 10 years in crypto time.
That is true, yeah.
And so, yeah, at Asymmetric, when we looked at Bob, we look for founders who are like super driven, going to go push things forward, really pound their head against a brick wall and turn it into dust to go make something happen, which is probably what it feels like to be a founder.
To be fair, yeah.
I've been a founder twice, so as a VC, it's funny to learn about VCs. A lot of VCs never were builders. Like, they never were startup founders, and I'm like, what you go through as a startup founder is really intense. It's a lot of ups and downs, very, very high highs, very low lows, but it's a lot about persistence. And For us, we want to see someone who's pragmatic to go build whatever the market wants. Versus, I think with Lightning and a lot of these like Bitcoin Maxi projects, it was super Puritan ideology of like, I'm building my hobby that I want other people to become as their hobby. Like Lightning payment terminals. No one wants that. You want them to want that, but they don't want that. And so that's where, I think there's been a huge misallocation of capital in the Bitcoin payments sector because of people, I think, just not being prudent with their money and prudent with their time and thinking through what does the customer want? What does the market want? So if those customers are Bitcoin, or if those customers are Ethereum people that love Bitcoin, that seems like a great customer for a Bitcoin DeFi project.
I mean, I think, it's the first user base. They already know DeFi and they love Bitcoin. I mean, look at the Bitcoin DeFi activity on Ethereum and other networks. Like, it's very active. And, if we can't onboard DeFi users into Bitcoin L2, how are we ever going to onboard the retail user?
Totally.
Like, that just doesn't work. You can't, leapfrog and go after, the most difficult user to convert that, has never used DeFi and it's all different. And then again, like, why do we need Ethereum for this? Well, look, Bob is built on the OP stack. We're a member of the superchain. Why do we do that? Well, because they have managed to concentrate some of the best builders in the space that are focused on account abstraction, hiding the complexity of wallets. I mean, we built a demo with partners like Dynamic and ZeroDev and Pimlico within 1.5 weeks for Bitcoin National last year, where I can send you Bitcoin to your email and Telegram. You don't even need a note down your seed phrase or anything to receive it. That has never existed on Bitcoin before. Now you can do that.
Right.
And I feel, by working and none of these teams are ETH maxis. No, they love Bitcoin. They want to make it work with Bitcoin. It's just hard without, having someone like Bob in the middle.
Totally.
Connecting these two worlds. So yeah, it's been a fun ride, I have to say. But again, one thing that kind of bothers me is that from a lot of the Bitcoin maxis, you get the feeling that, if you're pragmatic, you're not building for the ethos. You don't care about decentralization. That's not true. I mean, I've spent 10 years trying to build trust minimized Bitcoin bridges. 10 years. And then when Robin came up with BitVM, brilliant. I would have, all credit to Robin. The persistence of trying to hack that into Bitcoin, amazing. And that really enabled us to then work on BitVM too.
Right.
And what really kind of I find fascinating is that people don't realize that you can do both. You can build a product, talk to clients, understand what they want, in the background still be working on security and making sure that, the stuff that they're going to use is going to be much more secure than anything else in the market. Because that's what we're actually doing. Our research is a split, right? We have the product teams and the marketing teams that try to build product and attract new users and learn, do you care about security? Well, yes. What's the trade-off? If you have to wait for 5 hours to do something, but it's very secure, will you care? Probably not. But at the same time, our engineering team actually works on BitVM and Bitcoin staking security. And actually, Bob will likely, if we look at the timelines and if we meet in 6 months from now, will likely be the first to ship this to mainnet. It might not be the ultimate perfect solution of a Bitcoin rollup. Right, but it's going to work. It's going to be the most secure thing on the market. And then we can talk to our customers, talk to our, the users, and understand, okay, when do we need to make the next step to make it even better?
Right. When you attract a certain amount of TVL, people might get nervous if the game theoretic design architecture isn't up to a certain standard. So, but, for example, some of these things, when you talk, when people were like, oh, well, everything has to be perfectly decentralized. I'm like, well, for my $5, if I'm moving $5, I'm willing to take a risk sometimes, if an L2 is storing $1 trillion, then my requirements for trust assumptions will be really high.
But then you can also afford to invest more money.
Right.
With Bitcoin L2s, if you want to build a real Bitcoin rollup, you have to post the data to Bitcoin. Well, that costs a lot of money. And if you're a new chain, a new product, and look, Bob is one, there's going to be many. There's already 75. There's going to be so many Bitcoin layer 2s.
Yep.
The new ones won't be able to afford. I mean, look, even we, if I start posting all the data to Bitcoin, our fees will be 100x to 1000x that of Solana and Base. And I think it's a bit delusional, and maybe I'm overstating this, but people will not pay 100 to 1000x more just because it's on Bitcoin.
Right.
For their trading and activities that you can do everywhere else. No, you have to be competitive. And once you're big enough, once you have $1 trillion secured on your chain, once there's so much activity, well, sure, then you can afford it because you have, the economic activity there, their fees are coming in, and you can actually say, look, we have 1 million users every day. each of them is going to pay a cent more, and then, we have better security. They're not even going to notice, and they're going to be happy about it. But if I tell you now, oh, look, your transaction is going to cost $10, but, it has full Bitcoin security, I think it's a tough sell. And maybe it will work for a subgroup. Like, I don't, and I think it's important for people to try that and learn, or look, if I'm wrong, great, perfect. I just, from experience and looking at other networks, I think people don't care as much just yet. And they usually care about security when something happens. But,
Right.
we have a short memory. 2 weeks later, we forget. And I think you need to have a balance between like security and usability. We love
100%.
the word like usable decentralization here.
Yeah, I like that. I like usable decentralization. I haven't heard that before, but that makes total sense.
So what's your take? Like if we look at, the future of Bitcoin and Bitcoin L2s, like 6 months from now, and then like a year and like maybe 5 years from now, how soon do you think, we'll see the economic activity start shifting from ETH and Solana, assuming, we get these things to work, BitVM works, we prove out that, we have a really secure system. What do you think needs to happen for essentially Bitcoin L2s to flip Ethereum and ETH L2s? And how soon, do you think we can achieve that? And that's a tricky question because obviously I'm biased to say sooner than later, but yeah.
I am as well. So Bitcoin spot trading dictates the cycles, right? So once Bitcoin goes above 150 to 200K, then retail really comes back in, and then we see that kind of fresh blood come back into the ecosystem. And I think that will bring the attention that Bitcoin L2s will finally get. So I think Bitcoin has to complete its spot run. Also, alts follow the same cycle, like alts only moon after Bitcoin's mooned. So speculation has been the core driver of Bitcoin adoption. This is undeniable. 2013, 2017, 2021, and now. That's the reason why Bitcoin is around, is because of speculation, not because of coffee payments. Those did nothing. And when we look at how will Bitcoin L2s and Bitcoin DeFi get adopted, why wouldn't it follow the same path? So I think, what we'll see is we saw this with ordinals, a little glimmer of this, where we've seen some intense waves of speculation in the ordinals ecosystem. I think that's a great example of will we see activity and interest in Bitcoin DeFi? I mean, if you look at some of the ordinals like BRC20s, their trading volume is huge on Binance.
Yeah.
That's evidence. You got DEX activity as well, like Magic Eden and whatnot. And then, you look at Bitcoin L2s, like Stacks, I think, is a prime example of that. There's market demand for a Bitcoin L2 with a token. Rootstock.
Absolutely,
Yeah, so Stacks, I think, whether or not you agree with Stacks design architecture is a whole different question, which as a Bitcoin builder, I'm assuming you'd have an opinion. But, that's where I think those represent, and then WBTC and this activity on Ethereum, these all represent that there is indeed demand for Bitcoin DeFi, that speculation will come to that sector. And so, once speculation kicks in, then of course, protocols like yourself and others can use incentive yield to attract people. Incentive yield isn't a bad thing. I used to have kind of a negative reaction to it. But then again, I worked at companies like Uber headquarters, where when I was working at Uber headquarters, we were configuring incentives for riders and drivers to come take a ride or drive for Uber. And people forget that Uber is a network effect of riders and drivers. So we are stimulating a network effect to capture market share, because the more riders and drivers you have, the lower the ETAs are for the riders and the more revenue the drivers make, which enhances how many riders and drivers want to take that network. So Uber was willing to burn VC capital, incentive yield, to develop network activity. Protocols are the same thing. A lot of these are network effect based. So, taking token capital and using that, it's almost like if Uber gave away equity instead of cash. Like if they weren't using cash to subsidize the rides, but they give you Uber equity instead. So I used to be kind of allergic to incentive yield, but actually we see this in the Web2 world pretty often.
I think as long as there's a real market and a real use case and real demand in the background, it can work. And
underneath
Bitcoin
it all.
is the best example, right? We see that there is demand. Sure, you need to there's a lift for people to go to Bitcoin L2. And realistically, it's a new trust assumption, it's a new thing. You have to motivate them and incentivize. But if you stop at that, okay, that doesn't work. Yeah. But if you have products in the background, you work with these people, you offer them new things, you try it out, you iterate, okay, that actually gives you a chance to convert them to real users.
And this is why companies give coupons to go to the grocery store and buy beans for the first time, because you buy it once, you try it, and you're like, actually, I really like those beans, and you go back and you buy it full price. Same thing with any sort of discount or any incentives for any other thing, anything else. Protocols are the same thing. So I think, with speculation, you have more incentive yield to give away, which then makes it a virtuous cycle of You're able to draw people in because you can spend more advertising dollars, showing people, telling people about your protocol, and then you can incentivize builders and users. And so that, at the end of the day, there needs to be activity that continues after the incentives run out.
Of course. Otherwise the users will leave.
Of course, which I do think there is legitimate economic activity that people want to do at the end of the day. Otherwise, then it's, So I think that's where I think that's the core driver of Bitcoin L2s. I think we see a glimmer of like Bitcoin DeFi summer. We see a little bit of glimmer of this cycle. I'm still pretty optimistic. I think we see a lot of this happen this cycle, like this year. But it wouldn't be surprising if it stretches out and we don't see the really huge Bitcoin DeFi flipping in Ethereum until like the 2028 cycle.
In all fairness, right? If you look at the sizing between like the assets that are deployed in DeFi for Bitcoin and Ethereum, for Ethereum, it's 30% of the market cap.
Right.
For Bitcoin, it's what, 0.1, 0.2, 0.3?
Yeah, if we see that just move up to 1%.
It's already, it's massive. And I think that's what, I think with Bitcoin, it's a really tough market, right? If you're trying to speed through it, if you're impatient, if you take too many shortcuts, Bitcoin's going to chew you up and spit you out.
Yep.
So you have to be in for the long run. But if you win in Bitcoin, you don't just win in Bitcoin, you win the entire market.
Yeah, people forget that Bitcoin isn't just the largest crypto asset. It's larger than everything else combined.
Exactly.
And that sort of TAM is too hard to ignore. And as a venture capitalist, of course, we're looking at strong builders building in markets with gigantic TAM. And this is the biggest opportunity that exists in crypto. Like, how could you not be excited about this? Where people are like, oh, Bitcoin DeFi, I'm skeptical. I'm like, but what if you're fucking wrong? Like, yeah, sure, it's tough, and I hypothesize it'll be a thing, and you're building it, and you see it, and we could be wrong, but I don't think we are. But imagine if they're wrong. Like, do you want to take that bet? Like, you want to bet against Bitcoin? Like
that has never worked before.
Exactly.
Never.
Like,
yeah.
It's crazy to me that people just dismiss Bitcoin DeFi as like, I don't know. I'm like, but if you are wrong, you will have missed out on literally the greatest opportunity ever in crypto. There will never be a bigger one because there's no bigger TAM than Bitcoin.
Look, we've seen that with other chains, DeFi protocols, funding is increasing. If you don't have a Bitcoin strategy, you're going to have a tough time in 2-3 years.
100%.
All right, with that, we're at the end of the session. Dan, thank you so much for joining. Any last words, anything that we should kind of, wrap up with?
If you're listening to this and you're feeling a little bearish, look, we are, I think, still very much in a bull run. Bitcoin's never been in a better spot. And also, I think Bitcoin DeFi is going to be one of the most exciting things in the space. So I definitely encourage you to check out Bob and other stuff that's going on there.
Cool. Amazing. Thank you so much. And see you next time.
Cheers.